Brace defense, ladies and gentlemen.
Well, investing in the market can certainly test your emotions, especially in a downturn or a correction like we are seeing now. But take it from a professional investor who is not emotional at all when it comes to money. Let's listen to what he has to say. Here's tonight's All New Money Talks. Understand, when the market turns negative for a period of time, those of us in funds that are so-called set it and forget it should just realize that these funds will turn lower and that they will eventually come back.
There isn't a reason to watch every move that your portfolio makes, especially if it causes you stress and leads you to make a mistake. It's better just to tune it out. If you follow a well thought out investment strategy and have a diversified portfolio, you can go do something else you enjoy instead of watching those investments.
And another top rule of thumb is don't sell. That only locks in your losses. In a downturn, you don't have real losses, only losses on paper.
Another mistake investors make is moving to cash. That's the first reaction that many people have, especially when the market continues to go down and down. But the problem is that turns a paper loss into a real loss. Then you face the decision of when do you get back in. If you get back in too early, you might still have more losses. If you get back in too late, you're going to miss out on some of those gains.
Neil Vanoy also reminds us that this may be painful and frustrating, but it is also very normal and can lead to future gains in the market.
Not differentiating between volatility and loss is another mistake. Volatility is a normal part of the stock market. You need to learn to live with those ups and downs. Selling during a downturn turns that volatility into a loss. So you want to make sure that you never put money into the stock market that you're going to need in a short time frame. You want to be able to invest and give it time to ride through any volatility before you have to sell.
So here is the good news in the market that we are seeing this year. Everything's on sale.
Another mistake investors make is not continuing to invest. Even if you avoid the mistake of selling and you still hold on to your investments, any investor that's not already retired is going to want to keep adding to their portfolio. Now's a great time to start buying more of your holdings at a discount price.
And just to reiterate, downturns can be buying opportunities for long-term investments, but markets can always go lower before they rebound. I don't have a crystal ball right now what's going to happen, so avoid using leveraged investments or margin accounts to try to make quick profits from the volatility. Think long-term when adding to your portfolio. 100% of the time over the long term, the market has gone up.